Alrighty guys, what is going on? Welcome back to the Best Investing Money Management channel on YouTube. In today's video, we are going to be talking about the top Vanguard index funds and ETFs to buy. I hope you guys enjoy it. If you guys get anything in value out of this video, hit that like button, subscribe to the channel, and if you have any questions, concerns, make sure you guys ask them down below. And if you want to learn more about investing in the market, make sure you guys check out my course. I dropped the price from $99 all the way to $15. It's only good for this week, so make sure you guys go ahead and check that out. But let's roll the intro and let's jump into it. Come on. Bam. Alrighty guys, so the very first Vanguard ETF that I personally love is ticker symbol VOO. Now this is the Vanguard S&P 500 ETF. Now pretty much what this is this represents the top 500 companies in the United States. So you'll have holdings such as Apple, JP Morgan, Johnson & Johnson. The beauty of this one is this on average gets about a 9.8% return over the past 90 years. Through all the recessions, the ups and downs of the market, we've seen that annual return of about 10%, which is fantastic. This is something that I go heavy in. I put about 40% of my money automatically into the S&P 500 because this is a long-term investment. Anytime you pretty much invest in this, it's virtually like investing in the U.S. economy. And I really think that, yes, right now is uncertain times. Of course, that's why we've seen some sell-off from it. But given that, we've gone through several wars, we've gone through several depressions and recessions, this is just going to be another stepping stone moving forward here. And me personally, I think that this one carries a ton of long-term potential. Now moving on to the next one here, we have ticker symbol VUG. Now this is another Vanguard growth ETF. So this one here outpaces VOO, but this one is going to be a little more volatile, right? It's going to have a little bit more swings. The reason why is because you're going to be investing more into growth stocks. So you'll still have those very stable companies like Apple, like Google, but you'll also have companies like Facebook or Meta. You'll have companies just that are a little more volatile but carry more risk, but overall have more reward. So this one here is definitely worth investing in. You're going to have great growth, but you're going to have a little more ups and downs, as you guys can see just by looking at the chart, than VOO. Definitely something to at least, keep on watch for sure. But could definitely be one that I would highly recommend. The next one here is ticker symbol VIG. Now this one here is a growth ETF. So yes, you're going to be having great growth. You're going to be getting about just under a 10% return, which is still fantastic, but you'll have a lot more well-developed companies in here. So you'll have companies like Coca-Cola, Lowe's, Home Depot. You'll have companies that are growing their dividends, and you can use those dividends to start compounding your account. And I definitely think that this is a great one for people that are looking to develop another passive income stream but don't know where to start. Now looking at it, you guys can see you'll be getting about a 77-cent dividend every single quarter. So it's something that you can use to compound your money anytime we're dealing with these types of ETFs and stocks. I always recommend for the first 10 years, 15 years, use a broker that offers DRIP, which is that dividend reinvesting. So you're going to use these dividends to buy more shares. Then those shares are going to pay you more dividends. So you're starting this snowball effect. And before you know it, this passive income is going to be one that's going to be very, very large and could outpace your 9 to 5. So it's definitely worth, looking at for sure. The next one here is ticker symbol VT. Now this one here is pretty much the Vanguard total world stock market. So you'll have a whole bunch of stocks in here. From US tech, you'll have some, more developed companies. You'll have about 11% of your money are in emerging markets overseas. So yes, you're virtually like betting in the entire world's economy. And as you can see, anytime we have, uncertain times, it's very similar to the S&P 500, just because this is going to be mostly in the US, but it definitely carries some other emerging markets such as, India, such as Tokyo or Japan, companies in there, and economies in there as well. The next one here is ticker symbol BND. Now this is the Vanguard Bond Index. Now this one here is a little different than something that you might know. Now looking at these numbers here, you can see we've had a decent upward trend. On average, the bond market gets about a 5% return. Now me personally, the reason why I love this is because you're going to be getting paid about 13 cents, as you can see. You'll get 13 cents that is paid out on a monthly basis, as you can see. So every month you're going to be getting 13 cents. Okay, for a stock that's only 81 bucks, it's definitely worth it. But this one here is very, very low risk, low reward. Now, the reason why I hold bonds is I use them almost as like a holding of cash. So anytime, I put money away into the bond market, I pretty much just put it there because it's going to get a 5% return. It's a lower risk investment, and I'm going to be getting some dividends. So it's better than cash. Now, anytime we see a sell-off in the market of more than 6%, I will sell my bonds and I will buy the ETF or just the general market that sold off. Now, the reason why I do this is because, one, the bond market, as you can see, does have a little upward trend, which is great. So instead of holding cash, I'm still getting some interest off my money. Now, when the S&P 500 or when the market sells off, I sell these, use that money to put in to the other ETFs. It's a great way to, slowly start keeping, instead of putting money in cash that's just sitting there and not earning interest, it's you're putting money in here and you're going to be getting some dividends. You're going to be getting some decent growth. And in my opinion, I definitely think it's just a better alternative to holding cash. And I really think that everybody should be looking at all of these ETFs and indexes, guys. It's definitely worth looking at. But that is it, guys. I hope you guys enjoyed the episode. If you did, hit that like button, subscribe to the channel, and if you have any questions, concerns, make sure you ask them down below. And we'll see you later. Take care. Alrighty, guys, that is it, though. I hope you guys enjoyed the episode. If you did, hit that like button, subscribe to the channel, and we will see you guys later in another episode. Remember to stay happy, guys, stay positive, and stay safe. Take care, everyone.